All right, hi everyone. My name is PK, and here I have Mohit with me, who is a member of the Property Investment Accelerator. And in this video, I'm going to go through how Mohit bought this amazing property. It's actually in Perth, where he also lives. He bought it for 499. The rent, correct me if I'm wrong, is about 560, so the yield is about 5.8. It's actually been revalued based on comparables at $540,000. So almost you could say about $41,000 of instant equity. So we'll go through how to buy such deals, how to buy high yield property, maybe even the state of the Perth property market, and lots of other golden nuggets from Mohit from his experience. So carry on watching, and Mohit, thank you. Well, we've already been talking, but thank you for making time, and obviously big congratulations on your deal.
Thanks, PK. Thanks. I appreciate you saying such good things about me.
Um, so maybe we'll just start off from the start, like just for context for everyone. I'm not sure if you want to talk about it, but perhaps like what is your background like professionally? What do you do? What was your property background before doing the course, just to paint a bit of a picture?
Sure. Okay, so I'm originally from India. Lived in different countries before I moved to Australia about 8 years ago. So initially, I was renting as anybody would, and then I wanted to buy a property because of the hassles with renting and stuff like that. So I bought a property myself. um, Thought about investing and ended up with an apartment which was sold by the developer. And when it came to settlement, because he was still building 1 year later, when I wanted to get um, the finance for it, the valuation was much lower. So I had to struggle getting the loan for the property or for the apartment, and I couldn't get it from one of the big fours, right? So the reason I'm telling you all this is because of relating to what you also said in the course. Because if you are buying direct from guys who are developing, then of course there is some interest involved of these people, which a person like you know a starter investor like me wouldn't know what's going on behind the scenes. Anyway, sold that property off last year and wanted to get into landed properties. And I was desperate in terms of getting into property market, and I was also thinking of employing a buyer's agent. So started watching, which are the companies are out there who are providing services. Came across your course, and the course fee, just to be honest with you, felt a little steep. And then I just wanted to make sure that although I did know that even in terms of the whole value of the property, even if it is one, the course fee doesn't matter. It's just a percent or two. Because if I, let's say, go and buy a property for 500, whether it is 500 or 510,000, it wouldn't make a difference to me, right? So did my research, spoke to people, also read reviews of people who have done the course in the past, and confidence came in, spoke with you, and then I thought, what the hell, let's go for it. Now, bought the course, get into it. 6 weeks of course. It I was, to be honest with you, was very overwhelmed with the number of chapters there were. It's not just that you just read the chapters and that's a done deal, because you tend to forget in something which was very new for me. So I did the whole 6 weeks in about 1.5 weeks. Went back again and started
The
doing
videos,
it.
you mean? The different modules?
That's right. The chapters, the modules, and the videos. Some were very long, as much as three hours each. So because I did that one in one go, had to go fast in terms of the speed, and it was okay, because having done it once, it wasn't that bad and understandable. Now came the application of it, right? So the third time, so this was like 3 weeks in, and I was getting nervous that I wasted my money, because I'm not doing anything. There's no action. It's just reading is not going to get me anywhere. So started applying one by one, starting from scratch again. Started doing my research, the suburb selection, the fundamentals of it. Before that, the property selection, the negotiation part of it. Um, got in touch with the mortgage brokers, the accountant, and I know I'm not going chronologically, but it's everything that is popping in my mind
No
now
problem.
because I've done it like 2-3 months ago. If I have to go again and buy a property or think about property, I have to do it one more time. It's not that I have learned, but I know how the process works. So with that information, when I went to start looking at properties, doing research on what properties are available on real estate, um, you immediately know while when you're looking at the properties after having done the course that 100 out of 110 properties are not worth looking into after even looking at one time because it just doesn't fit the criteria. The other 10 properties, there is so much competition. But I mean, coming back to this particular property, I did the valuation, use the valuation tool. Um, Also for the value of the land itself, I was searching for what land values are, what the sold values of the sell prices of the land is around the area, and couldn't find anything, right? So had to reach out to some agents, find out whoever has sold, because most of the land that did sell previously, the data was like 4 or 5 years older, or they did not provide a price at which it was sold. So I had to call them, ask for them as to what the price was, and then derive a value in terms of what the land value should be, so that I calculate the valuation correctly. Once I had that calculation, when I went to inspect the properties, again there were a few interested people, but then nobody was offering. One guy in front of me, I overheard saying that he's going to come back after 2 hours and put an offer in. So I thought it's a good opportunity. Negotiated a bit. I think it wasn't listed for so much, and it's not my intelligence or anything to do with me that I got this property for a lesser price. The listed price itself was 505,000 plus, right? So all I had to do was to bring it down a few $1,000. Now the valuation came out to be about 550, and the reason I think is either the seller wasn't informed of what the value of his property was, and maybe he listed it lower, or because maybe the market picked up suddenly, and therefore the value came out to be higher. So it was not because of me or my, nothing of anything that had to do with my knowledge. It was just that it happened by chance. But if I did not have the backup of the course that I did, I wouldn't have gone and invested in this area. If that answers your question.
Yeah, no, no, absolutely. And going right back at the start of your answer, just to highlight something for everyone, you made this amazing point that for someone who's new, you don't really know how the internal goings on of the real estate industry work and buying an off the plan apartment. And most, let's be honest, most people experience this. They buy an off the plan apartment. By the time it comes to settle, the valuation has gone down because there's, so much developers' profit that's been baked in to the actual property deal. And so it's so you juxtapose that versus what you said later, where if you actually get knowledge, you start to see the property market and individual properties with a completely different lens. Out of 110, you can easily say 100 are just not even worth spending any time on at all. And of course, I mean, it's natural that the good properties, there'll be competition, right? And this is another point that people should understand, that even in a quote unquote down market, interest rates are going up, et cetera, et cetera. In fact, Perth in the last quarter, it went down, I think, from a city level by 0.6%. In the last month, Perth has been 0.00% growth, according to CoreLogic. But then what you're saying is that you bought this property for 499, and because there's a sudden jump in prices in the suburb, it's worth 540 already, like basically instantaneously. So another lesson to be learned from this experience that you're sharing is that there's always markets within markets. Like we can't really influence what Perth does, but we can capitalize on the growth of individual pockets and individual suburbs. So that those are some great takeaways. I want to hear a little bit more about your process, but just before that, I'm always curious. And you mentioned it, so I thought I'd dig in just slightly a little bit more, Mohit. You initially were looking for buyers agents. The course is expensive, $6,000. Let's be honest, it's not like a cheap $500 course. Like, and you also mentioned that, you read reviews and said, to hell with it, let's just do it anyway. But why didn't you end up doing property dealings with a buyer's agent? Why did you decide to do the course or a course, any course?
Again, for the same reason, PK, is that, how do I know that this buyer's agent does not have his own interest involved when he's, referring a property to me, right? I mean, this guy, whoever he is, I'm sure there are some honest people out there who really want to help people like me, who does not know about, property investing. But then it goes same with, like, property managers or, sellers of anything, without you knowing whether this person is genuinely providing a good service, or, after taking the money, which I think ranges from 10 to 15,000 or even more for the services of a property, or a seller's agent or buyer's agent. In addition to that, I don't know what he's earning. Why is he giving me that one property rather than so many other properties, right? I do not have knowledge to that. That's one. The second thing is, if I have done the course once, then I have done the course, right? I have to maybe go and revise and see certain aspects of it, some of the modules again. But if I end up with 3 or 4 properties, I would have already saved $60,000, right? That's one. And secondly, if I do the course and do something wrong, then it's on me. It's not somebody else who has pushed me to take a decision. So that's mainly the reason why I wanted to do something myself. And most people, I don't have so much time, because everybody who is property investing are not just property investing. Most of the people are also working full time, like I am. So although I don't have time, but I still wanted to, take control of what I am doing in life. And, 700, 800,000 property is a big sum, right? We don't save that much money in 10 years time. So I can't allow somebody else who I do not trust to handle that sort of money for me. I think that's the main reason, PK.
Yeah, no, well answered. And of course, like you said as well, there's plenty of good people, but it's just hard to know if you don't know what you don't know. So it's best to be able to verify deals for yourself, as opposed to just blindly trust someone else. One thing that you mentioned, which was really quite poignant as well, is the need to take action. You said that you did the whole course, and then it was almost like overwhelming because you didn't do anything about it. So then you went systematically, much like I actually recommend in the course, and did one module at a time and actually put it to action. What would be your advice to, like, forget the course, like, what would be your advice to hundreds or thousands or tens of thousands of property investors who, and people, you guys know who you are, like they scroll realestate.com, they subscribe to probably 20 different property magazines or articles or websites. They come get their emails in their inbox every day. They're just flooded with property stuff, but they never end up buying a property, or they take months and months and months and end up buying a subpar property. This point of taking action, what is the first step? What is the second step? What is the third step, perhaps, that people should be doing to actually take all of that information? I'm not even talking about the course, just general content, and put it into action.
I think the biggest problem, and I'll answer your question, but let me start with this. I think the biggest problem is people are genuinely interested in knowing something which interests them, whatever subject it may be, whether it is property investing or cricket or whatever else, right? The problem with property investing is that there's a hype in terms of what it is. There's some magic pill that somebody needs to have to be able to be successful in this. So when people go out and they think, it's as easy as, put the suburb in your real estate or Reva website and you will come up with bunch of properties, then you apply your filters, whether it is value or number of bedrooms or whatever, and, go for inspection. If it is something that your bank allows you to take as a loan, then go for it without thinking whether this is something for me and whether I should be, getting one property or five properties within the limit that I have provided by the bank. So what I'm trying to say is there's a lot of noise. And when I say a lot of noise, it's like there's 2% real information and 98% noise. And people who are not experienced investors, including me, they do not know the difference between that noise and the information that is going to help them. So whether it is your course, whether it is good information through books, whether something else, or I'm sure there are other courses out there. And I heard about another course, and I'm not saying, I'm not going to name it. I don't really know the name. And that is only, if you want to flip properties in a few months' time, rather than keeping it for longer term. And there are good courses, right, if people want to do that. But unless you really get in touch with either somebody who has done this and is a tested person who has done well for himself in property investing, or it is good information that you can put your money against, then go for it. That's the first step. Knowledge is power. So you need to have that knowledge to be able to go into the market. You can't just bet your money. It's like going to a casino and putting $500,000-600,000 on the table. Because you don't even know. It's not about value of the property. It's not that your property is going to vanish, but what if you end up buying something which is worth only 200,000 and you pay 500,000 for it, right? So unless you have that information, that you're confident that what is the best anybody can know in the property investing, you shouldn't be going out in the market, because it's like betting. It's not something an investor should do. It's a gambler thing. So I think that's the first point. And once you have that information, you can skip steps. You can go to step number 3 already, because you are better than most of the people out there trying to buy a property. I think that's something which I got from your course. And I know, don't mention your course, but that's something I did not have before doing this course. So I believe, is that something that answers, or
Yeah, no, absolutely. I liked that the point that you made, that 98% of the content out there is noise. I do agree with that entirely. And I feel that a lot of people, we were talking about this off air before, where a lot of people who have $1 million, $2 million, $3 million to spend, and I don't mean in cash, but including your borrowing capacity, including the loan,
yeah.
they go off. Let's say they live in Sydney or Melbourne. I know you're not in Sydney or Melbourne, but let's say they live in Sydney. They buy in a nice suburb in Sydney. They say, let me use all of my deposit, $200,000, and all of my borrowing capacity, and buy one big expensive place in Sydney, because Sydney is a world city. All the jobs are there. It will grow the most over the long term. All that stuff in one property, done. Like there's no need to worry about anymore. The reality is obviously different. For example, the last 20, 30 years, even a place like Hobart has outperformed Sydney by a long way. In fact, Brisbane has as well. So, a lot of these myths needs to be demystified before even entering in. I think that's step number 1, exactly like you said. You're also in the similar boat, Mohit, where I think you could have easily gone off and bought a $1.5 million property, and then you could have dusted your hands off and said, that's my property investing finished. I will, come back to this in 10, 20 years time, and hopefully I've made a bunch of money. Like, what were the factors that drove you to saying, no, I actually want to buy 3 properties at around 500K each with higher yield, as opposed to one at 1.5?
I think that's something I did not know before doing the course, right? And when I looked at the fundamentals, which is module 0 and module 1, and as I said, honestly, I don't remember the module numbers. I know there are things out there which in need I can go back to. But what it also said is, looking at Australia average growth rate in the last 10 years, it's I think 7% growth yearly average. So let's say after the end of 13th year, if I want to sell some properties to pay off all the loans out there for all the properties, then I can only do it if I have different properties or a smaller number of or properties which are not as high value, because I will not have many high value properties. I will have just one or two properties which I can't sell half of the property unless I subdivide and stuff, which is hassle in itself, because how am I going to break the house in half, right? So so that's, I think, the reason why, if I have basically a bunch of properties, I can sell off some and then pay off all the loans. Then that works out. The other, and I think this is more important than the first point, and that is, I don't want to put all my eggs in one basket. So I'm not going to buy on one street 5 properties one after another. I'm going to buy properties, maybe maximum 2 in each suburb, and then different suburbs throughout the country or cities. That way, if one suburb or one city goes down for whatever reason, then I have other properties which are still doing well. And I mean, if I am very unfortunate and unlucky that every property goes down, then it will be for every investor out there, right? So I don't think that is going to happen. So I think those are the two reasons why it's better we invest in more number of properties, smaller value properties, than one $5 million property, which might grow, might not grow, but then you have no way of reducing your loan amount and start to live a life without having any loans and any, you don't maybe even have to work if you can pay off all your properties and have some passive income coming in.
Yeah. And that's the thing. We don't want to pay off the properties by paying principal and interest necessarily. We want to be able to sell one or two of those properties and use the profit to pay off the other properties. Like, that is the name of the game. It's not any secret sauce, but that's how property investors have got wealthy in Australia for as long as anyone can remember. And that requires multiple property assets, and multiple property assets, as you said, can realistically be only achieved if you buy at an affordable price point. And the other thing is that at an affordable price point, the yields are good, and the yields increase, or the rents increase at a faster rate than if you buy, $1.5 to $2.5 million properties. Yields or rents really don't go up that much at that price range because they're already so expensive and unaffordable for the majority of the population. Last question, Mohit, and thank you once again for these great insights. I hope everyone's getting value from them. Last question is, you've got this good property deal now, $40,000 instant equity, even though, as you very modestly said, it was nothing, no big credit to you. I would argue there was some credit, but, you've done well nonetheless. What's one piece of advice or one sort of golden nugget that you wish you were told maybe 6 months ago in property that would have, really fast-tracked things for you, that would have allowed you to buy property either quicker or better or higher quality, or just reduce stress in your life? What is that one thing that you wish you knew that you can tell yourself right now 6 months ago?
Gaining knowledge, I think, would be, as I said earlier, if the only reason I did this and was able to do this is because I was confident that the knowledge I have is better than most of the people out there. And even if they are there and the competition goes too high, the price goes too high because everybody is putting in offer, I'm going to back out, because this is not going to be the last property I can invest in. So I think my piece of advice to myself in future, as well as to others who are looking to get into the game, will be, don't just go out there and buy something just for the sake of buying, right? It's a huge value that you are putting in out of your hands to something which you don't know what you're getting into unless you have that information with you. So I think that's the information, that's the advice I would give, that information is something that can only help you getting where you want to be.
Yeah, no, 100%. Thank you for that. And once again, bought under $500,000, 5.8% yield, $40,000, valuation up by the time you settled. I mean, genuinely, it's a great suburb on the south side of Perth. Not too far actually from the CBD, a really gentrifying type of location. And I think you mentioned as well in your email that at the first viewing there were 30 applications, 30
Yep.
tenant applications. So we know not only is the market hot, but also the rental market is hot. And I wouldn't be surprised if this current rent, which is mid 500s, goes up to 600 maybe 12 months from now. That certainly wouldn't shock me at all. So once again, Mohit, big welcome, not welcome, congratulations, and yeah, big tap on your shoulder. You should be proud, and thank you so much for your time.
Thanks for your time as well, PK. Thank you.
Okay, hopefully everyone, you guys got some value out of this. If there was anything that you wanted me to delve deeper upon, if you wanted to ask any questions, just leave them in the comments below. Otherwise, hit the subscribe button, turn notification bell on. There's almost 100 of these videos right here. On YouTube, there's a dedicated playlist. Even if you're not looking to do my course, please watch these videos because there's real people just like Mohit, who, have taken time to share their insights and, their successes. So do yourself a favor and get educated, like Mohit said. And yeah, I'll see you next time. Thanks again, Mohit.
Thank you.